Welcome to an in-depth exploration of the psychology of the elite investor. Today, we're diving into what sets top investors apart. It's not just about numbers or strategies. It's about mastering emotions. Emotions drive decisions, and decisions drive return. Elite investors know how to control fear, greed, and everything in between. In this video, we'll uncover their secrets. We'll explore the latest research and real-world examples. By the end, you'll have tools to think like the best. Let's start with why psychology matters in investing. Markets are driven by people, and people are emotional. Fear can make you sell at the worst time. Greed can push you to buy when prices are too high. Most investors lose because they can't control these feelings. Studies show emotions cost investors billions every year. A 2023 report from Dalbar found the average investor underperforms. They earn about 3% less than the market annually. Why? Because they react emotionally to market swings. Elite investors don't make this mistake. They train their minds to stay calm and focused. Let's look at how they do it. First, they understand their own biases. We all have mental shortcuts that cloud judgment. One common bias is loss aversion. This means we feel losses twice as much as gains. It's why people hold on to losing stocks too long. They hope to avoid admitting defeat. Elite investors recognize this trap. They cut losses early and move on. Another bias is overconfidence. Many think they can beat the market. A 2024 study showed overconfident traders lose more. They take bigger risks and trade too often. Top investors stay humble. They know the market is unpredictable. They rely on data, not ego. Confirmation bias is another hurdle. This is when you seek information that supports your beliefs. You ignore warning signs. Elite investors challenge their own ideas. They seek out opposing views. This keeps their decisions balanced. Herd mentality also trips up many investors. People follow the crowd without thinking. Think of the crypto boom in 2021. Many bought at the peak because others did. Elite investors avoid this. They think independently. They buy when others panic and sell when others cheer. This contrarian approach often pays off. Now, let's talk about fear and greed. These are the two biggest emotions in investing. Fear makes you sell during crashes. Greed makes you chase hot stocks. Both can ruin your portfolio. Take the 2008 financial crisis. Fear drove millions to sell at the bottom. Elite investors like Warren Buffett bought instead. They saw opportunity in chaos. Buffett invested billions in Goldman Sachs. That move earned massive returns. How did he stay calm? He focused on long-term value, not short-term noise. Greed can be just as dangerous. In 2020, retail investors chased Tesla's stock. Prices soared to unsustainable levels. Many bought at the peak and lost big. Elite investors avoid chasing hype. They stick to disciplined strategies. So, how do you master these emotions? Let's break it down into practical steps. Step 1. Create a clear investment plan. A plan acts like a roadmap. It keeps you grounded when emotions flare. Your plan should include your goals. Are you saving for retirement or a house? It should also define your risk tolerance. How much loss can you stomach? Set rules for buying and selling. For example, only buy stocks with strong fundamentals. Sell if a stock drops 10%. A plan removes guesswork. It helps you stay rational. Step 2. Diversify your portfolio. Don't put all your money in one stock. Spread it across stocks, bonds, and real estate. Diversification reduces risk. If one investment tanks. Step 3. Practice patience. Markets fluctuate. That's normal. Elite investors don't panic over daily drops. They focus on the big picture. The S&P 500 has returned about 10% annually. That's over the past century. Patience captures those gains. Step 4. Limit news consumption. Financial news thrives on drama. Headlines amplify fear and greed. In 2023, media hype fueled market volatility. Elite investors tune out the noise. They check their portfolio quarterly, not daily. This keeps emotions in check. Step 5. Use stop-loss orders. A stop-loss automatically sells if a stock drops. Set it at a level you're comfortable with. This prevents emotional panic selling. It's a tool elite traders swear by. Step 6. Keep a trading journal. Write down why you made each trade. Note your emotions at the time. Review it to spot patterns. Did fear make you sell too soon? Did greed push you to buy junk? A journal builds self-awareness. Step 7. Practice mindfulness. Meditation calms the mind. A 2024 study found it improves decision-making. Even 10 minutes a day helps. It reduces impulsive reactions. Elite investors use it to stay focused. Now, let's look at real-world examples. Take Ray Dalio, founder of Bridgewater. He's known for his disciplined approach. Dalio uses a principle called radical transparency. He encourages debate to avoid bias. This keeps emotions from clouding judgment. His fund has delivered consistent returns. Another example is Cathie Wood. She runs ARK Invest. Wood stays calm during market dips. She focuses on innovation trends. Even when her funds dropped in 2022, she held firm. Her patience paid off in 2023. Her flagship fund gained over 50%. These investors share key traits. They're disciplined, patient, and self-aware. They don't let emotions derail them. You can build these traits too. Let's explore advanced techniques. One technique is scenario planning. Imagine best and worst case outcomes. How would you react if stocks crashed? What if they doubled? This prepares you mentally. It reduces impulsive decisions. Another technique is dollar cost averaging. Invest a fixed amount regularly. This smooths out market volatility. You buy more when prices are low. You buy less when prices are high. It takes emotion out of the equation. Elite investors also lean on advisors. A good advisor offers an outside perspective. They can spot biases you miss. In 2024, advisors saved clients millions. They prevented panic selling during dips. Finally, elite investors study history. Markets always recover. The Great Depression.com crash 2008, each time stocks bounce back. This knowledge builds confidence. It helps you stay calm in storms. Let's talk about recent trends. In 2025, markets face new challenges. Inflation fears are rising. Interest rates may climb. Geopolitical tensions add uncertainty. These spark fear in most investors. Elite investors see opportunity. They're buying undervalued assets now. Sectors like energy and tech look promising. They're ignoring short-term noise. This mindset drives superior returns. Let's recap what we've learned. Elite investors master their emotions. They avoid biases like loss aversion. They stay humble, not overconfident. They challenge their own beliefs. They don't follow the crowd. They control fear and greed. You can do this too. Start with a plan. Diversify your investments. Be patient and tune out noise. Use tools like stop-loss orders. Keep a journal and practice mindfulness. Study the greats like Buffett and Dalio. These steps build mental strength. They lead to better returns. Investing is a marathon, not a sprint. Master your mind and the market follows. Thanks for watching. Start applying these tips today. Your portfolio will thank you.